We're going to continue our discussion on deductible business expenses with transportation and travel expenses. Only ordinary and necessary travel expenses are going to be deductible. Transportation expenses refer to the expenses of getting from one workplace to another workplace within the taxpayer's home area, and travel will refer to business travel away from home that requires an overnight stay. For deductible local transportation costs, this would cover, the deduction would be eligible for costs incurred in getting from one workplace to another workplace, visiting clients and customers, a business meeting away from the taxpayer's regular workplace, and getting from home to a temporary workplace. The automobile mileage rate for business purposes is 54.5 cents per mile for 2018, or a taxpayer can claim the actual expenses that are incurred. Actual expenses will usually give a larger deduction, but would require more record keeping for the individual. Travel costs for business travel require an overnight stay. Travel, meals, lodging, and other incidental expenses are allowed, and travel for business should not last more than 1 year. Limitations also exist if the trip is partially personal or if there's lavish or extravagant expenses. Business meals are deductible, but they are limited to 50% of their cost. They must be either directly related or associated with business. Business entertainment is no longer deductible, and the standard meal per diem is $51 per day, and it can be higher in high-cost areas. There is some allowances for that published on irs.gov, and meals cannot be lavish or extravagant. Prior to the tax law changes, business entertainment was deductible. So if a company had a business dinner scheduled that was directly related or associated with business, that would still be deductible under 2008 law. But in addition to that being deductible in prior years, if there was a round of golf played earlier in the afternoon, that would be business entertainment that would be deductible in prior tax years. And if they decided to go to a nightclub after dinner, that business entertainment cost would be deductible under prior tax years. Now, only the meal that's directly related or associated with business is deductible. Let's take a look at an example. Ted is our taxpayer, and he is a self-employed public relations manager who lives in Texas. He spends 5 days in San Francisco conducting business, and then drives to Sonoma to go wine tasting with friends for 3 days. So we want to determine what expenses are deductible. Well, his airfare, since his purpose is primarily business, will be deductible. His hotel in San Francisco, since he was conducting business there for 5 days, would be deductible. His hotel in Sonoma, because that's non-business, would not be deductible. His meals in San Francisco of $230 would be deductible at 50% limitation for meals. The meals in Sonoma would not be deductible. The car rental to drive to Sonoma would not be deductible because that's for personal purposes. The trolley pass that he purchased in San Francisco, if that's for commuting purposes to get from like his hotel to the meeting location, then that would be deductible. If it was just for sightseeing purposes after his business meetings, then that would most likely not be deductible. So you can see that one could be a little bit of a gray area. His wine tasting fees from Sonoma would not be deductible since that's personal. Taxpayers can also deduct part of their home expenses if the home is used for business and that business use is exclusive, regular, and for the taxpayer's trade or business. To claim this deduction, a specific area of the home must be used only for business. This area can be divided out by square footage or for a whole room, but that area can only be used for business. So if you have your business set up in your living room, or if you have it set up in a spare bedroom, but you also use that bedroom for overnight guests, then that room would not be deductible for your business because that's not only used for business. You're also using it as a guest room. For employees to claim this deduction, it must be for the convenience of the employer. Home office deductions are going to be reported on Form 8829. The calculation is determined by square footage that's used regularly and exclusively for business. The direct business expenses related to that space are going to be 100% deductible, and any indirect home expenses are going to be deductible based on the square footage used. So the order of deductions for business use of the home, we will first deduct any expenses that would be deductible in any event. So your mortgage interest and real estate taxes, since you could itemize those on a Schedule A. And then the business use of insurance, utilities, and then depreciation. This order of deductions can come into play because your home office deduction is going to be limited to business income. So your home office deduction can't cause your business income to be negative. Business bad debts can be deducted as an ordinary expense if incurred in a business. It can be partially worthless or completely worthless. Now, this would only be deductible if that income was already claimed, if you're using an accrual method of accounting, not a cash basis. For business casualty losses, this would be considered an ordinary loss, and it's not limited by the 10% AGI floor like a personal casualty loss is. So let's take a look at an example with business use of a home. We have Jose, who uses 20% of his house exclusively for business. He had the entire exterior of the home painted and the interior of one room that he uses for an office painted for $3,000 and $500 respectively. What is the total deduction that Jose can take as a home office expense for the painting? Well, for the room that he uses as an office, the $500, he can deduct that at 100%. And he would be able to deduct the $3,000 at 20%. So his total deduction would be $1,100. Prior to 2018, hobby expenses were claimed as a miscellaneous deduction. That item was eliminated for taxpayers with the Tax Cuts and Jobs Act of 2017 for 2018. However, the income from hobbies must be included with the taxpayer's income, but they are not allowed to deduct any expenses. Education expenses are deductible if they are to maintain or improve the skills of the taxpayer and they meet express requirements of the law or regulation for a job. They are not deductible if they cannot meet the minimum education requirements for employment or it qualifies the taxpayer for a new trade or business. So if it's education that's needed to keep their current job, then that's deductible as a business expense. However, if it's used to improve the taxpayer's education requirements, so they would qualify for a new business or trade or a promotion, then that would not be deductible. Self-employment tax is paid by self-employed individuals and businesses filing a Schedule C. There's two parts of this: the Social Security tax, which is 12.4%, and Medicare, which is 2.9%, which gives us a total of 15.3%. Social Security tax is going to be limited to the first $128,400 of self-employment income in 2018, and there is no limit on the Medicare tax. Part of the new tax law is a qualified business income deduction. There is a deduction allowed of up to 20% of qualified business income. The deduction is the lesser of 20% or 20% of taxable income less net capital gains. If taxpayers are above the threshold of the income limit, which is $315,000 for married and $157,500 for all others. The taxpayer is subject to an additional W-2 wage limitation.